Hi, Victor. Welcome here at Builders. It's a pleasure to have you here as guest. How are you today, first of all?
I'm good, thank you, Michelle. I think, August is a great month to have podcasts
Yeah,
because,
yeah,
I mean, other things are not that crazy in August. Yeah,
yeah. Plenty of time to think
more
about
time,
this.
more time, yeah,
Yeah.
for casual
So,
conversation.
yeah, first of all, would you like to give us a little bit of brief introduction of yourself, of course, and of the fund itself?
Absolutely, yeah. Very briefly, I was born and raised in Uzbekistan, former state of Soviet Union. I was fascinated with technology early enough. Had my first PC, I think, back in mid 80s, and I think I was like the only kid in the entire Uzbekistan who had a PC back then, because my father was
Nice.
very kind of me giving me this as a gift. And I graduated from Tashkent University with the degree in computer science major. Started working in banks early enough. Didn't like banks that much, although I really spent my career in banking. I was CTO in two largest banks in this region, in CE region. One is still privately owned, one of probably top 10 banks in Central and Eastern Europe, and another is far the largest bank in this region. I was lucky enough to pioneer certain technologies and products in those banks. In the first one, in the beginning of 2000s, I started a mobile bank, which was a featured phone banking yet. So it was prior to iPhone and Google Phone era. And then 2008 to 2015, I served as chief technology and digital officer in the largest bank in the region. And I basically went from zero footprint in digital and mobile to astonishing 90 million consumers with over 45 million daily active users in the system.
Wow.
And it was bigger than Bank of America, Chase, and Wells Fargo combined by 2014. 2015, I decided to start my own career, like outside of corporate world, my own business I'm in, and started a venture firm. Moved to California, where I thought all venture funds must reside back then. And since then, I'm investing. I'm a lucky member of partnership of four partners. So three partners joined me on the way, and a brilliant team of 10 investment professionals. I believe that we are doing really good job in just defining and finding out the niche where and how to invest funds like ours, which is not yet a big fund, probably like a little bit less than $500 million in the management altogether. It's difficult to find a spot in early growth stage format, but I think that we have found a spot and we have found us to be quite competitive in this spot. So I believe that that's like an exciting thing to do what I'm doing now. So I'm going to continue.
No, it's a very interesting experience, coming from because you don't have the typical, let's say, finance experience or investment banking experience. You come more from the technical side, so you know exactly what those kind of banks or startups are trying to build, or which kind of technical challenges are they facing at the moment. So it's kind of a different perspective, from the usual VC.
I think I'm very special, not because like every person is very special, but I think that my appearance in venture is very special. If you think of like venture funds, so they are either managed or founded by former entrepreneurs like Mark Andreessen and Ben Horowitz, Mickey Malka, Ribbit, and many others, great entrepreneurs who built their own ventures and then started venture capital journey. But there are much more people from, for example, many more people from investment banking community because these people know how to raise capital.
Yeah.
So they know how to like review financial models and stuff like this. So there are many lawyers who decided to do venture business, and obviously there is a lot of legal stuff going on in venture. So yet there are very few corporate executives like me, and I spent 25 years building up something for someone, right? I was just in the corporate world, and at some point I had over 25,000 people reporting to me. So it was a giant organization of over 300,000 people altogether, from which, well, 25,000 or more were in technology and product management field. So I came from that kind of like industry nature, and it's very rare in that you wouldn't find a lot of people who founded venture funds after 25 or 30 years of corporate career in technology, right?
Yeah.
So I'm pretty unique, and I think I know something what others don't, how large businesses buy, and that's very important. I believe for startups, especially in B2B space, it's extremely important to understand how their customers are buying, right?
Yeah.
To build up this sales organization in a way that it would be best adopted towards corporate enterprise customers. And that's what I know from within, right? Because I was a buyer of so many different technologies in such big firms. So I don't know how corporate world, how corporate managers think. And I believe that that's a unique knowledge. Second unique knowledge, I do know how to scale technology teams because I scaled my team from almost zero to 20,000, more than 25,000 people. And that was also a unique experience. So how to scale your technology team from 2 to 4 to 10 to 20 to 100 to 500 people. It's a challenge, right? And no investment banking people or lawyers know how to scale up technology teams, and I do. So these are two probably biggest like competences I have and I offer to the portfolio startups, the portfolio companies I'm sitting on the board or advising.
Mhm. I would like to talk a little bit about your first investments, but before going in that direction, there's something that you just said that is very interesting. So scaling up those technical teams is a challenge for every company, out there, mostly for smaller companies, smaller startups. And it's something that you learn the hard way, you learn by making a lot of mistakes and everything. Um, but recently, we saw the impact of AI and the impact of those kind of tools in the market, in the conditions of scaling up technical teams. I was wondering if you had the opportunity to like interact with those kind of tools and to see the kind of impact that they had in startups, in fintech startups, or in large corporations. We are seeing today the disruption bring by those kind of tools, and I was wondering if you, with your experience, you think that those kind of things are useful, disruptive, or maybe even dangerous nowadays.
Well, I think that it's a great opportunity for every company, including startups we are investing in.
Mm,
I think that you could not ignore AI in any way, whoever you are. If you are a consumer, if you are a small business, or you are a large company, or a startup, right?
mm,
So I would divide like startups into two different categories in terms of AI applicability. One is like AI virgin, AI native, the one which were born after AI, Gen AI revolution after 2022 and those that built their businesses before, right? But
mm,
AI is essential for both. So since we are also like from one of our funds are investing in growth stage companies that got like $100 million or more in revenue, you wouldn't like find that many companies that are AI native or AI virgin, which would get to 100 million plus in revenue, right? But there are plenty of companies which were born between say 2015 and 2020 that have got to like 200, $300 million in revenue so far. Despite that, we really go deep into how these companies that are born before uh, AI revolution, how well are they adopting AI in
mm,
their technologies and their services. I think that we will speak later about this vertical versus horizontal AI companies. When talking about vertical AI companies, I think there is not much that differentiate one company from another nowadays. So on technology side, it's very hard to distinguish which technology is a better one, right? Because most of course in good companies today is written by basically AI agents. We have a company in our portfolio which I can't name the company, but it's like an interesting fact that they had over 100 engineers, software developers, in the end of 2023, and CEO reported that they only have like 35 engineers now, software engineers,
Wow.
end of first half 2025, while they have increased a throughput of well code development by three a factor of three. So they improved 3x, 300%. Uh, Although they have basically laid off 60%, 70% of their capacity. How come? They now have AI agents working for them, right? So one manager or a senior software developer is basically overseeing a work of 30 to 40 AI agents. And they claim that they managed to automate the entire process of testing of deployment and everything related to code, which was a big chunk of their operational activity, and it was rather time consuming. So this was like the best I've seen so far, but I'm sure it's not the end, right? Now, when you have a prompt engineer, as I would call him or her, and like 30 or 50 or 100 AI agents, how can you write a better code than your competitor? So you could not. So what would make a difference? Proprietary data would make a difference, and knowledge, deep knowledge of industry specifics will make a difference, and your ability to sell. So in today's world, sales operations, sales management, sales engine is more important than anything else. If before you could have distinguished by technology and product, now only sales efficiency and deep knowledge of customer and deep research on customer data may make the difference and may let you outcompete other companies in your domain. So basically, I believe that that's very essential to do AI, right? So for that reason, we really look into that very carefully when we make a due diligence of the companies, prospect companies we are working with. But an interesting fact is that like more expertise you gain on technology side and product side, it's more difficult to implement AI. I believe that the biggest enemy of AI implementation deployment today is an expert, because expert is the last to believe that he or she could be replaced by AI, right? And unlike all previous revolutions that eliminated like blue collar, not even blue collar, but handyman, I mean, just low qualified jobs. This revolution will eliminate highly qualified jobs, and that's the difference between AI revolution and all other industrial revolutions which were happening so far, because no engineers were um endangered by all previous waves of industrial revolutions. This industrial revolution of AI will go top to bottom. So probably like waiters and plumbers will be the last to be eliminated by AI. Top level software engineers and other kind of engineers will be the first one to be eliminated from their knowledge and expertise domain. And that's the big thing. So more engineers, more overqualified engineers, like extremely qualified engineers you have, it is more difficult for you to make this AI transformation happening in your organization. And I think that what CEOs have to take care about, right? they should convince their best employees in every field to be AI early adopters and supporters rather
Yeah.
to be blockers of AI revolution.
I strongly agree with this one. I think that right now is not an optional anymore to be, AI ready or to be an adopter of those kind of technologies. But you said a couple of things that are very interesting. I strongly agree with the sales point. I think that the sales part is one of those kind of things where there is still a little bit of human factor inside the decision, inside the process. That is going to be there for a while at least, and it's kind of very hard to replicate that kind of human factor. So for a while, I think that is going to be a competitive advantage to be able to sell, mostly if you're talking to financial institutions, to banks, that they have very long sales cycle and very long operation in order to accept new kind of offering. But I'm very curious about the fact of let's say substituting those kind of role. I've been speaking recently with a couple of CTO of fintech startups in Europe, and they're trying to implement these kind of technologies widely. And they see mostly two kind of trend going on. The first one is about merging different roles together. Like quick example here is a software engineer and a PM that is probably a product manager or even a project manager. They can be the same role right now because you can have an agent doing the market research, an agent doing the UX, and another one doing the development, all owned by the same person that is not an engineer anymore, is not a PM anymore, is kind of a mix of them. And the second one is actually not replacing people, but having a factor of multiplier of the kind of outcome that they're able to have using AI agent. So I wanted to understand if you think that there will be a wide substitution and lack of jobs due to AI, or we will see a different kind of disruption here.
Well, I do believe, I mean, if you like ask me whether there will be more jobs created by AI rather than jobs eliminated by AI, I still think that there will be more jobs created by AI,
Mm,
and it will be a factor of 10 or hundreds of thousands, right? So
mm,
it will not be a fractional. I mean, we will have a lot more jobs with this AI revolution than we ever had before. And these jobs will be completely different, right? Again,
yeah.
you will not need to be a domain expert in any given field in order to be extremely qualified in your whatever job in your position. Um, as I gave you already a couple of points on the software engineers which were replaced, I can give you another example. I am an angel investor in the company. I can't give you company name because it's still in stealth mode. But what they're doing is they are working on a very different technology of drilling
Mm,
without drilling. So they can just drill uh, like 3-4 kilometers down
mm,
without like really drilling things, right? So can't give you like more information on that yet. But an interesting thing is that they raised some capital, and I was luckily one of the investors in order to increase the team because it is like very engineer heavy design, right? It's not
mhm,
software. You need to like explore a lot of different options before you just
mhm.
come up with the technology and solution. And it's not a domain expertise in one field. You need to know a lot about a lot of different things.
Yeah.
And they are engineers of 4 people now, and they were going to scale to at least 12 research engineers in order
Mhm,
to do what they're doing now, because they thought that they will never be able to acquire knowledge in the domains which they do not understand. And
yeah.
you need to have a very specific, like specialist in very specific field of engineering in order to do some computation or some research on particular thing. What they ended up is adding, instead of having 12 people, they added only one. Now they're a team of
Mm,
5. And they are not adding more people. So I asked them, what the hell, guys, why are not adding engineers? You just said you need 12. You only have 5 now after half a year of funding being made. They said, we don't need them. because everything is being done by Chat GPT 4 so far in this deep search. And I was like, I didn't really believe that. So I met this folks in Israel when I uh, was there, and they said, "Look, I mean, we can show you how we can do things with ChatGPT, right? And comparables." And that was amazing, really. So they really can do so much in engineering without engineers, top
Yeah.
qualified engineers they wanted to hire. That's amazing how they can learn so quickly and get so much details, top-notch details. It's like details which only like 10 people in the world know, right? Now
Mhm.
ChatGPT is capable of replacing them. So I do believe indeed that this high profile engineering jobs are in the most danger. But where I
Mhm.
think and that's obviously like the biggest threat, right?
Yeah, yeah.
If you're a driver, so you learned how to drive in half a year, right? And now you're replaced by Tesla or Waymo or whatever, right? Now you're not a driver anymore.
Mhm.
So, but you only have got like half a year of experience, like I mean, learning, and then you just continue to maybe improve your ability to drive, right, your experience, but not dramatically. Now think of an engineer who really studied like for 15 years in college, like doing his undergrad, then master, then PhD, and he's like top-notch engineer in a given field. And after like 15 years of studying, and then 15 years of improving your engineering capability, everything is gone. After 30 years, you now caught in a loop. Now, like AI is doing better than you or like you. So what can you do about that, right? I mean, that's a big thing. But a good thing is that there are not that many engineers like that, right? So it will not be dramatic. It is dramatic for a person, but it's not dramatic for mankind.
Mhm.
But what will happen instead is that people will get a lot of other jobs, right?
Mhm.
You mentioned this prompt engineering thing, right? People will become a lot more creative, and I believe that what Meta has started doing and Microsoft started doing in like 10 years ago with all uh, this metaverse type of things where people live, work, do things in like separate kind of universe or metaverse, right? Creating their own worlds, creating their own kind of scenes and stuff like this. I believe that the mankind will slowly but steadily migrate into this kind of like
Mhm.
metaverse. That was like a little bit of a false start 10
Yeah.
years ago, but after like everything being happening in AI, I believe that where human beings will migrate to. So there will
Mhm.
be a lot of this metaverse, different worlds where people will operate. So today, predominantly the economy is well, both service or production economy are all about real world. Even we're talking about services, you could just make it like semi-real, but that's still like real.
Yeah.
And what you would call like a virtual economy is like a fraction of the total economy, right? So this virtual economy will grow like crazy in next 30 years,
Mhm.
and that's where the highest economic growth is going to happen in the virtual worlds. And these virtual worlds are going to become the workplaces, but also the living places for most of us and mostly for our kids and grandkids. I believe that where this enormous amount of jobs will be created. Think of that. You could not consume more than your body would
Physical
consume.
resources.
Yeah,
Yeah, of course.
physically, right? You could not. I mean, you may have like 20 cars, but
Mhm.
probably you will only be okay like with having like 5 cars. You could not
Yes.
eat more meat, right? Because like
Yeah.
your ability to eat is limited, but your ability to consume information and leave this like information flow is unlimited, and that's where in this virtual world uh, uh, the entire growth is going to happen, I believe.
Yeah. That's a very interesting point. I really thought that the entire metaverse trend was, kind of dead in a certain point of view, mostly because the market wasn't there in the first place at the time, of course. Right now, I saw recently a couple of startups trying to go in the same direction, try to come back to that kind of vision. Probably it's a little bit hidden by the whole, AI trend, so people are paying a lot of attention to AI, and it's not they are not paying attention to the metaverse anymore. But startups are still building in that direction, and I think that it makes a lot of sense to actually have those kind of economic factors and those kind of value creation in the metaverse right now, because basically much of the jobs that you have today won't be there in 5 years from now, and I think it's going to be very interesting. I still think there's no clear path ahead, while for example for AI we have a couple of, let's say, three, four, five clear winner in the race, and a couple of big tech trying to step in the metaverse industry. I don't think that we still see a clear winner or a clear path ahead, and it's going to be very interesting to see what is going to be something like that. Do you already have a name in mind that you are taking a look at, or someone that is building something interesting?
Well, first of all, I would not agree with you that we already know leaders, definite
Okay.
leaders in AI space. Yes, we do know many companies. Um, Everybody's talking about like XAI with its
Hmm.
Grok and ChatGPT of OpenAI and Anthropic with its Claude. But who said that this are going to be definite winners, right? First
Hmm.
of all,
Yeah.
you have big tech competitors of those,
Yeah.
which don't believe are going to be leaders anyway in this field, because
Hmm.
they don't have a specific DNA to become leaders in this space. So I do believe that this is going to be startups, right, or kind of
Hmm.
startups, like private companies so far. But I wouldn't give like 100% chance that this is going to be OpenAI and Anthropic, and not someone who has not yet born or someone
So
who
you,
has
you
not
think
been
like
known.
5 years from now, for example, we could see different kind of leaders in the AI space?
I believe so, yes. I think
Very
that
interesting.
everything is being built. I mean, every since the first microchip,
Hmm.
we can speak of information era or information universe we are living in. Everything is like information because like that's the essence of technology revolution, right? Of 20th
Hmm.
century, chipset and software. So you can think of this trend in a following way. First, infrastructure is to be built.
Hmm.
Uh, IBMs and Intels were those who have driven the economic growth, the evaluations in 80s, right? And then what came next? Next layer was like foundation, right?
Hmm.
Like um, operating systems and systems of records, Oracle's, Sybase, and Microsofts of this world, right? But then on top of that, who came across uh, bandwidth, right?
Hmm.
So you have Cisco now. And if you think of Cisco, this was the fastest growing company in the 90s, right? And everybody thought that it will just be forever, right? But then you had like next layer, which was an application layer, right on top, and then next layer, and everything ended up in marketplace kind of stuff. You may think of well, Apple to
Hmm.
be a marketplace because Apple was not better than Nokia in terms of the hardware. What Apple did differently, they implemented an app store, a marketplace in every phone, right? And they changed, pivoted the business model of what phone has become. Phone has become your wallet, your marketplace, from which you can download any basically service or product and just enjoy using it, right?
Hmm.
So at the end of the day, marketplaces win the
Hmm.
competition. So you may think of Nvidia today, what was back then Cisco, right, or
Hmm.
IBM, and obviously infrastructure will be commoditized quite quickly, right? So it will lose its main valuation power, right? Because there will be new kind of applications coming on top. How could you treat, for example, Anthropic or OpenAI with its ChatGPT? You might think of that as the next layer of middleware, right?
Mm.
Which is replacing Oracles of this world and Microsofts of this world by another layer, right? Which is a foundational layer. So there is a high like stake and battle for consumers, and I think that OpenAI is doing really fantastic on
Yeah.
that front. They are already at what 800 million users.
Yeah.
They will definitely be over a billion users by the end of this year. So they are battling like many others, like Nvidia. They are battling for consumers. So they try to become this marketplace. But
Mm-hmm.
whether they will definitely become this kind of marketplaces for AI revolution, or there will be some others. And there were attempts like Cursor, which is not a foundational model, or Perplexity, which is not a foundational model.
Yeah.
It looks like they're losing a momentum, that they're losing to Anthropic and OpenAI, because obviously
Hmm.
both can eliminate kind of like perplexities of this world from the scene and get in touch with consumers directly. But there might be some other smart ways of doing it, and you never know who will come with a smarter way of approaching consumer and who will disintermediate OpenAI and Anthropic from the consumer, and thus creating a new kind of marketplace. Uh, Potentially, again, Meta is trying to develop that, right? I have questions if they can do that. I mean, they claim that they have like the best AI tool embedded into WhatsApp, and WhatsApp is being used by what over I think 2.5, almost 3 billion consumers. But do you use this tool at all? I mean, I don't, right?
Me
So
neither.
yeah. So it's like a tool which exists but is not in use, right?
Yeah.
But again, I mean, there might be some other smart ways how this marketplaces could be created in AI space. But to your point, when it all goes to virtual worlds, where
Mm-hmm.
the economy will not be real, but we will be mostly virtual, and it will be 10, 100,000 fold of a real economy, right? The real economy could not grow faster than maybe like some people say, like with robots, it will probably be like 10%, 15%, 20% annualized growth of GDP because robots will replace people. Robots can work harder, longer, more efficiently. But more importantly, is that you can print robots uh, in thousand folds, right?
Yeah.
You may have like trillions of robots at the end of the day. So each robot will be efficient enough or most efficient. So it will create so much for economy, right? But again, virtual economy can easily grow 100%, 200%, 500% a year because there is nothing what can limit it, right? So coming back to that side, I believe we do not see and know a clear winner now, even in AI space. But talking about virtual worlds and virtual economy, I believe that there is not only yet a winner, there is no company being so far created that will be a combination of I don't know Palantir, SpaceX,
Mm-hmm.
and Google in whatever competing virtual world, right? Which will evolve out of this revolution and which will be probably like compared to GDP of the world,
Mm-hmm.
with some players who will take over the largest portion.
Mm. It's very interesting. I always drew, let's say, I always envisioned that kind of company as one of the big tech, to be honest, because I've been speaking with a lot of startups trying to go in that direction, in the metaverse direction, trying to build their own, metaverse in different ways, of course, starting from gaming, starting from digital assets, different direction, real estate also. But none of them seems to have, the kind of good idea or good implementation to actually do that and become that kind of point of reference. And at the same time, you had, for example, Meta, that is the perfect example in the direction with a lot of resources, a lot of computational power, a clear vision trying to do that. So I thought they could be that kind of perfect place. But at the same time, and in the end, as you said, they had a product that no one was using. So it wasn't the right place, or at least it wasn't the right time. But you said something that, in my opinion, is very interesting. So talking also about what you said in the beginning, you are very good, or you have a lot of experience at scaling up team, and scaling up people in the technical side. And we are seeing today companies like Meta actually trying to build a team in the AI space with crazy salary packages like 100 of million for a 3 4 years contract. I was wondering what's your opinion on that, because I have a strong opinion on that one. Of course, not just about Meta, but in general to that kind of compensation package. But I was curious about the opinion of someone that is actually very very knowledgeable in that direction. Do you think it's the right way to build a team? Using money as the only leverage, and that kind of money as the only leverage.
Well, I do believe that well, salaries and compensation is the last resort. So
Mm.
when you don't have anything else to offer, you offer money.
Mm.
And I think
That's a very
it is
interesting
not
answer.
a strong argument for Meta to end up being a winner in this AI revolution.
Mm.
And I admire that Zuckerberg is doing right steps, mostly, right? I mean, his vision to buy Instagram, his vision to buy WhatsApp was brilliant. And
Mm.
when I first learned that he's paying like $19 billion to buy WhatsApp was kind of weird. I mean, it
Mm.
doesn't worth it, but it ended up, and I was not the only one. And obviously,
Mm.
I mean, we all know that there were a lot of discussions on the board to
Yes.
do to make or not to make this M&A, and I believe that that really played well. But generally speaking, Michelle, that generally speaking, I think it's not the way it works. I mean, big companies could not lead the way of revolution by definition of these companies, right? They have a lot to lose. They
Mm.
have their own businesses, major flagship businesses. And with these flagship businesses, they could not put all eggs into one bucket of this one disruptive thing, right? That
Mm.
may happen or may not, right? So, being a big company, you could not make 100 attempts to do something from which 99 attempts will fail and one attempt will succeed, but will succeed big. Maybe 1,000 attempts from which 999 will fail and one will return you like
Mm.
the most. You could not because you are a public or even a private company, you have a lot to lose, right? No managers can sustain in the company, in the big company, by failing 999 times of 1,000. Because this manager will simply be gone after he has like 10 times failed.
Yeah.
So there will be not the 11th attempt, right? And I believe that that's the reason why innovation is happening in startups. Uh, Large companies can buy innovation, can adopt innovation. Cisco is famous for generating over 50%, I think, if I'm not mistaken, of its revenue from the companies it's bought, like from
Mm.
last 10 years. So basically, every rolling 10 years you take of Cisco recent history, you would find that almost 50% of their revenue is coming from those companies which they acquired, which is a very smart strategy. But doing innovation inside these companies is difficult. And that's the reason why Walmart lost at least maybe temporarily, maybe permanently, we never know, but lost to Amazon. That's the reason why Facebook have made what it's made at not Google, right?
Mm.
And that's
Yes.
the reason why OpenAI has made what Google was trying hard to make but was unable to. I believe that that's an essence of innovation, especially disruptive innovation. You have to put all eggs into one basket, right?
Mm.
You have to put everything on zero, right? And work hard to deliver. And only then you have one of thousands chances to succeed. The beauty of startups is that nobody remembers and knows the names of those thousands who failed, right? And we only know the name of this one that succeeded. For that reason, I don't think that there will be status quo, right? We think of big techs to be okay. I mean, these folks are smart and they know what they're doing and they will continue doing great, right? No way. Every revolution will bring its own heroes, and these heroes will disappear with the next revolution, right? And there will be new heroes, and that's good. That's the beauty of my work. So this will never end. There will be
Yeah.
no one single corporation, and you may imagine that AI is a driver to this single corporation that will be doing better than others. And there is a good argument in Dvarkesh Patel a little like movie he created with the help of, by the way, I think Gemini, Google Gemini, but I don't remember exactly, but like what kind of software he experimented. But the essence of that was like an octopus that kind of became kind of smarter than anyone, right? So by training, constant training, one CEO, like CEO agent, computer agent, or AI agent, may become kind of a better and better and better in everything it does. And then this corporation will become kind of like everything, right? Because it will just trade better, it will create better products, it will create better services, it will invest smarter. So it will just be a giant corporation governed by this super artificial intelligence, which will be better than any other intelligence in the world. And that's the reason why this company should like eat everything else in the world, right? We don't see it in nature. We see in nature high diversification, right?
Yeah.
And we see in nature that any disruption, like an asteroid coming or a supernova blowing life from the planet or whatever, or volcanic activity, and there will be new species, right? Coming after this unfortunate event for those who was put in
Get hit.
extinction.
Yeah.
Yeah, so this is the way evolution works. Every disruption brings new species on the scene. Like we are not the last species on this planet or in the universe on the scene. We should really understand that we are a temporarily solution, and there will be new solutions coming. Same thing with technology and innovation broadly, or more narrow speaking. I don't know from what perspective to think, but there will be always new companies, right? And some of them, many of them, thousands of them will fail, but some of them will become great and far bigger than what we may imagine, right? So is there a way that there will be company that will be $100 trillion company, adjusted inflation, so it will be compared apples to apples? Yes, there is, right?
Probably
Because
yes.
economy will grow, right? If you think of economy, like so far the biggest asset class in the world is yet real estate. Real estate is what I think global real estate is $400 trillion, residential, and another like $300 trillion the rest, like commercial and wholesale. So it's like $700 trillion total, far bigger than anything else. Think of like humanity in 300 years.
Yeah.
If we survive, we'll certainly be much bigger than just a civilization of one planet, right? And if it is, who cares what's the real estate economy in the world, right? It will
Well,
still
because it's
be
physically
big, but it
limited.
will not be, yeah, it will not be the biggest for sure. There will be something else. And for that reason, I think that virtual economy will thrive, right? Because there is no much place on the earth to build another $700 trillion worth
Exactly.
of real estate, but in the virtual world, you can build and build and build much faster, and it could just go through the roof.
Oh, it's very interesting also because limited space can bring only limited amount of value, and in a digital world you can actually upbuild anytime you want. The space is basically limitless, so it's kind of very interesting. Coming back to what you just said, so you were saying about the kind of innovation that startups can bring, and in the beginning you were saying about the shift from a CTO or a technical role to the one of investors. So I was wondering how that kind of shift happened during time. You started with business angel investment, or you just jumped directly into it, trying to open your fund. So I was in the beginning when you started.
Well, first of all, I thought I will do maybe like an operator's work.
Hmm.
I will start my own business, like startup, and I was thinking about many ideas, and I really liked a few, but I ended up not even trying because I realized that I did not fall in love with any so much that I can spend like 10 years or 15 years doing this single thing. So I decided to not to marry on one idea, but to keep dating. That's how I think of my business.
Like VC life.
So I have a privilege of being part of so many, but not
Mhm,
being a full like ownership of one.
mhm,
And I obviously started as a angel,
mhm,
and I quickly realized that I could not compete well enough by only investing my own cash, and I started raising money for the fund. I must admit that this is the least interesting part of my job
mm,
because I don't like this process. I would prefer to have money flowing from somewhere and I'm just doing my investment job. I really like helping companies. I really like doing business on the boards of the companies as advisor. I gained so far so much experience, not only doing things myself in my previous jobs, but also helping startups not making mistakes, which many of them inevitably do. But yeah, but this is part of the work, right?
yeah,
So I have to fundraise alongside with my team, and well, I meet so many interesting people. Actually, many of my investors are corporate customers,
mhm,
like corporations with their own challenges. So we try to build business where we help those companies to build or rebuild their own businesses with the help of technologies we are investing in. And we bring our knowledge to both sides. We bring our knowledge to startups, but we also bring our knowledge to investors. So investors, I think of this business to be a journey for investors rather than just to be a pure rational thing, right?
mhm,
Rationally speaking, you would never invest into venture more than say 10% of your um, net worth, right? So 10%, if even I make like 5x, which is like a very good cohort of
yeah,
funds, 5x in like 7, 8 years, I can only make 50% at maximum of their net worth, right? I'm not going to double their net worth. I'm not going to triple their net worth. So they will not be materially better with investing in me, in my fund or any other fund. So why they're doing it? Obviously, there is some rationality doing it because you need to diversify your portfolio across different asset classes, and you should have some proportion of your portfolio, your investment portfolio, in a high risk profile like our fund. Also, venture is very much a separate thing from everything else. So it's not symmetric to not correlated, if you will,
mhm,
to other asset classes. So you can invest into venture and thinking of that as you like reallocating your capital, locking your capital for future returns, avoiding ups and downs of the market. So you can, yes, it's not liquid, but you can
you can
avoid
still make
this
a
market
return
risks.
when
Yeah,
the
I
market
mean,
is going down.
yeah,
Yeah,
yeah, yeah. You still can do like like this asymmetric things. But on top of that, I think that everyone who invests into venture one way or another thinks of future, right? Thinks about the future, what the future will look like. And we are trying to build this journey with our investors, showing them and explaining them and telling them a lot about what's going on. And I believe that we have a lot of intelligence on that. I believe that we are not worse than consulting, largest consulting firms
Hmm.
in the area of our expertise. We know software and fintech. We know what fintech is going to be in the next 5, 10 years. We can connect dots and we can tell our customers, our investors, how things will look like, what things will look like in fintech world or in B2B software or in AI, right? We have a very deep understanding of that. And we are trying to help our investors in building up their own business journeys, returning them back not only IRR, not only returns, but also deep knowledge, deep understanding of technology trends and business landscape overall.
Uh, it's very interesting to make that kind of comparison between consulting and venture because basically you are kind of scouting the market right now for what consulting going to be studying 5 years from now. So it makes a lot of sense. But coming back to what you just said, you have a lot of experience in fintech, of course, and you're seeing that market evolving. I would like to understand what's your point of view on how fintech will be 5 years from now. So where do you see this market going at the moment? We saw recently many kind of companies investing, for example, in stable coins. We saw a lot of interest in the rise of digital banks. Revolut is a name, Nubank is another. But I would like to understand what is your vision on the future of this kind of market? Nothing that is actually pragmatical and happening right now, but what we could potentially see 5 years from now that we didn't spot it yet.
Well, I believe that the biggest challenge for financial industry will be um, discovering how to build agents
Hmm.
and how agents will build each other. So imagine that there are millions, billions, or even trillions of different agents, and agents are hiring, laying off, cooperating,
Hmm.
exchanging information, exchanging value, cooperating, and doing a lot of stuff. And it's thousandfold or even millionsfold of complexity of how humans work. And you have to start building all this, right? You have
Hmm.
to uh, build a system, a platform that will be a real-time online engine for billing agents. And I believe that that's a big thing. And no technology, no company is ready today to provide anything for this future use. I believe that's gonna be a very big thing. Second, I believe, and I would not call it payments. It's not even micropayments. It's not now even nano payments. It's a just different type of payments where businesses are created on the spot, or uh, workforce is created on the spot. And then some orchestrator decides how this workforce, what this workforce should look like, and it should real-time auction this work, decide how to pay, agree, negotiate on the deal. So you may think of the smart contracts on steroids, right? There will be
Yeah.
millions, billions, trillions of these contracts signed in autonomous, fully autonomous mode by agents, right? So, and respectively built and paid by agents. So it's hard to imagine now, but I believe that that's a very big challenge for financial services. So second, I believe that unfortunately, as we see it now, this world is becoming more difficult for global entrepreneurs because it's like falling apart. There is a high um, decentralization going on in a bad way. Uh, so some would believe that this is kind of deglobalization, kind of where like you could not really rely on a single financial platform across different geographies, different businesses. And I think that banks were actually were leaders, were in the front line of globalization of the first wave, and banks have supported that largely. They were coming to all different corners of the globe to provide the unified services, and there were pioneers like Citi, like HSBC, like ABN AMRO, a few others, Santander. Now you see an opposite, right? Banks are losing, and actually they are in the front line of deglobalization now. They are shutting down their branches, shutting down operations in different countries, de-risking themselves, going back to their homelands. So I believe that companies, and we have invested in one of these companies called R136, that can bring it back to those entrepreneurs and businesses who do global businesses, who say have branches in Malaysia, Vietnam, Australia, and Nigeria, and who want to see themselves as a single business. Now it's extremely more difficult than 10 years ago. To build it as a single business, you will have silos because you will have to split your financial services into different banks, geographical linked to whatever geographies you're in, right, physically. And banks that can build these bridges like air wallets can actually become the next drivers of financial FI growth. Uh, and obviously, to your point, blockchain and Web 3.0 and DeFi is going real adoption now. I think it will
Yeah.
be largely adopted. I am a big believer in tokenization of assets, speaking generally. Every asset from real estate to basically um, stock, equity, fixed income, whatever it is, right? So everything, including IP, will be tokenized, and I think that tokenization will bring a lot of new businesses in financial industry space altogether. And it's related to smart contracts. It's related to DeFi, decentralized finance, and I believe it's opening really a lot of opportunities to companies that are building up in this space, in this domain. Last but not the least is obviously payments, uh, uh, all sorts of payments, domestic payments, cross-border payments, uh, just general things, what Stripe, what Adyen, Visa and MasterCard are doing. I think that payments will be embedded. Like, I mean, Stripe is probably the first one to really explore this real big. But if you think of Stripe, market share in payments is still tiny, right? So you can build $200 billion. I don't know what's the valuation now, and we will see when it goes public. We'll see the valuation. It should be probably big enough. You can build like a giant company, which still is a fraction of uh,
Total payments
percentage
market.
of
Yeah.
payment overall payment market. Banks are well protected, obviously, especially in the US. They're less protected in the UK, and that's the reason why Revoluts and Monzos of this world are coming out of the UK market.
Yeah.
If you think of like the US market to be um, similar to what the UK market from uh, bank protection legacy uh, legislation is, you may think of a hundredfold of Robinhood. Sorry, of Robinhood is a great company, by the way, as well.
Yeah.
Of Revolut. I mean, Revolut. Some people would think of to be one of the largest banks, and it is of like in Europe, and a candidate to be the first European $1 trillion company. I mean, that's what I hear from many supporters of that. Um, but you can think of like much more than $1 trillion company in payments only or in banking only in the US, right?
Yeah.
If you do it right. I think that banks have not used its privilege of proprietary data because banks
Mhm.
know a lot about us. We claim that Google knows a lot about us. We claim that Facebook knows a lot about us, or ChatGPT knows a lot about us. Compared to what banks know about us, it's nothing. I
It's
mean,
a
banks
fraction.
really know a lot about us, especially our prime banks.
Yeah.
But
I think that
guess
JP
what?
Morgan is trying to do that right now with access to open data from API, trying to monetize at least that part. But it's a
They,
step in that direction at
they
least.
try they tried hard for decades already, but
Yeah.
they were unable to. I don't know. Is it technology? They claim this is not technology; it's just the privacy laws. I don't think so. I mean,
Mhm.
Facebook and Google are also all in this privacy laws
Yeah.
and GDPR and stuff, right? But for some reason, they still make clue at Amazon of what you are, right? And banks
Yeah.
don't. I mean, it's crazy. Sometimes when I see banks, I have a pile of paper every month from banks which I'm a customer of.
Mhm.
And when I see this papers coming and I open an envelope and read what they offer to me, I really understand that they just made a zero effort of
Yes.
knowing who I am. Zero
Absolutely.
effort,
Yes. No.
right? I mean, and these are top-notch American banks.
Mhm.
I mean, when I just have this pile of paper, I think, oh my gosh. I
Yeah.
mean, how come they sent me this
And it would be
stuff?
so easy for them to actually make a step forward in that direction because I've been working in the open banking space and it's that easy to understand the life of a person just taking a look at the transaction of 1 month from the credit card, for example. You can easily understand how
Absolutely.
many children do you have, if you have a car, if you have an house, if you're going traveling for vacation, if you would like to buy something, and it's unbelievable the kind of information that you can understand from those transactions. But it's still a market that is, from a certain point of view, untapped because there's a lot of barriers to actually take the real advantage, the real value out of those kind of transactions, out of those information. That I think that they are trying, at least banks are trying to protect from a certain perspective. So
So
yeah, strongly agree.
I think that banks, from that reason, I mean, banks do feel themselves in a kind of a box,
Hmm.
especially the U.S. banks. Banks, they are protected so heavily by legislation. You know that there are maybe three or four, right, largest banks in the U.S. that have licenses in all 50 states, right?
Yes.
And there are 14,000 banks in the U.S. and only three have a full-scale license in all 50 uh, states, because every state has its own legislation,
Mhm.
barriers to entry, a lot of pain points created for new commerce overall, right? And it's a status quo. A
Yeah.
status quo. Big banks do not want other banks to get into this territory. Smaller banks do not want any changes. They're lobbying really very efficiently, by the way, and
Mhm.
real big U.S. All the U.S. Political spheres of influence for not changing the status quo. I mean, does it help the U.S. banks? No. I think that
Mhm.
banks in Eastern Europe, in Turkey, in Egypt, in
Yeah.
Russia, by the way, not saying, I mean, Russian fintech is outstanding,
Mhm.
right? I mean, they have
Lot of very
outstanding
good
technology.
entrepreneurs
Yeah,
coming
yeah,
from there.
yeah, like
Yeah.
Tinkoff and well, and state banks and privately owned banks. I mean, they're amazing. I
Yeah.
mean, from technology perspective. But if you think of like banks in Vietnam, I think that they're equally good, right? And
Absolutely.
compared to what banks can do, like in the US nowadays, it's like I mean, it's completely outdated. So I hope that there will be change in the US banking landscape as well that will allow new banks to be built and new fintech to thrive.
Yeah. I
At
think
the
that
end of the day, consumers will and businesses will certainly win from that, right? Because at
yeah.
the end of the day, when there are good services, good products, who wins? Like consumers and businesses do win, right? From this.
Absolutely agree. I think that U.S. banks are facing more or less the same kind of reaction that European banks saw in 2015, 2016, when you saw the first like neobanks and digital banks actually getting customers. At first they tried to oppose them, they tried to fight back and everything. Then after a while they said, okay, this is here to stay. Let's try to keep advantage out of it. And they tried, to right now they are trying to invest and they're trying to cooperate. So it's kind of a different kind of mindset. But I think that U.S. banks have such a position in the market that they're still trying to defend that kind of position instead of cooperating. And I don't think that is an approach that will work on the long term. Sooner or later, they will need to face that fintech is here to stay. And yeah, so it's a very very interesting approach. But Victor, again, thank you very much for your answer. It was a very,
Thank you.
very interesting conversation, a wonderful conversation. I thank you again for your time, and I wish you the best for everything that you're doing right now with your fund. We'll keep a very close eye on your investment.
Thank you very much, Michelle. It was great to speak, and thanks for having me on your podcast.
Thank you very much. Thank you again.
Thank you.
Bye. Thank you.